Hey everybody, this is Richard Noto here. I'm a Florida licensed realtor, Florida licensed home inspector, and notary public with loan signing agent certification. So if you are thinking about purchasing a home, the one thing that can put a stop to it is the mortgage pre-approval. Now this is the most important thing that anybody could ever do in the process before looking or even considering the price that you want to spend. This is something that you really want to do, so you really have a good solid foundation of what's going to happen. Now in this video I'm going to kind of get into a lot of the pitfalls of it. With that said, I am not a licensed mortgage broker or anything like that. I don't have a mortgage license. I have a realtor's license, so everything I see that happens is basically what happens to customers when they contact me, okay? And also too from personal experience, because I also have applied for mortgages many times in the past myself over the course of my life. So let's get into it. So you're thinking of purchasing a home. Okay, so the first thing you want to do is you want to get a mortgage pre-approval. Now, please do watch this video because it's really important. There's going to be a lot of topics I'm going to go over. Now, mortgage pre-approval is different from a pre-qualification. And I've said this in a lot of videos. The pre-qualification is basically an estimate, totally useless, typically gets home buyers into trouble. So for the pre-approval, that's when they ask for your tax returns. So whether you go into a bank for the mortgage, or you contact a broker, or you're using the lender for the home builder, you have to submit your tax returns. That's huge. So the pre-approval many times will also go to the underwriter, okay? That's like a really, really good pre-approval. So if that happens, all the better. Now, the first reason for this is to know how much the bank is going to lend you, okay? This is not a number that you could ever possibly figure out on your own. There's too many rules, there's too many regulations in place for this, and how they come up with it. So once you get the pre-approval, you're going to know how much the bank will lend, because the pre-approval letter that you get, it's going to have like your name, address, and it's going to state something like the funds have been verified by whatever the lender is, and you are approved for a loan of whatever the amount is. So once you know that amount, you will then know how much you can spend. Now, typically what happens is the opposite occurs at first. Home buyers consider how much they can spend without even knowing how much the bank is going to lend. So the next thing, now this is a huge section over here. It's going to give you time to fix issues, because issues many times come up for home buyers. Now, sometimes it could put a total stop to the process, which means the bank's not going to lend, and it's going to take a certain amount of time, a certain amount of time to fix the issues that they found. Okay, so the first thing is your credit. Maybe your credit's not so good. Maybe you have too many credit cards, things like that. Now, again, you know, these are just very common things that happen to potential home buyers in the process that I'm pointing out here. The combinations are potentially endless. Okay, so your credit, you know, maybe you just need to pay off a few credit cards, stuff like that. But this is not something that you would know unless you go through the process. The next thing, maybe you have too many loans. Could be student loans, car loans, who knows, whatever type of loan you might have. A home equity loan, on top of your mortgage potentially, things like rent, stuff like that. Your debt to income ratio, okay, the debt to income ratio. Mortgages have a certain ratio that they use in order to come up with how much they are willing to lend you and how much money they see that you have free each week or each month, however they look at it, to spend on a mortgage. So if this ratio is not the ratio that they need or require for the various loans, that again could just, you know, take your approval and just stop it right there. The next thing, time at your job. How much time you have at a job is just, you know, super important, and what they require is going to be based on the loan and of course everything else. Now, if you are moving from out of state, excuse me, if you're moving from out of state to Florida, there's going to be certain requirements for your job. So if you're changing jobs, this could change things. Now, just don't not get the pre-approval because you think, okay, well, this is it, I failed while I was watching this video. You still have to get the pre-approval to find out the truth. The worst thing to do when purchasing a home is to create things without facts. Don't imagine things. Always get the facts from the licensed source. Okay, the job location. So that kind of ties into the last part, your time at your job. Where's your job located? So again, if you're moving from another state, it's going to change things. If it's an out-of-state move, again, I just said that. If you're poorly funded, which means you don't have a lot of money sitting in the bank, you are going to have to put money down on the home as well. So typically the mortgage is going to look for somebody that's pretty well funded, and then the loan that they also might offer as well will change. Maybe it's a conventional loan, a VA loan, FHA loan, different types of loans available. Again, they have all the programs right there sitting on their computer to offer you. Your credit score. Credit score is kind of a big one. It's not everything in the process, but it's definitely a big one, and the better your credit score is, the more chances you have. And if you're up in the higher 600s, 700s, 800s, I mean, the higher the better. Okay, so the next thing. Now, having the pre-approval done early, it's going to give you time to plan the move. Now, what does that mean, really? Up here, you might have to fix some things along the way. So it's going to give you time to fix some things so you can plan your move. But also, the date to start your build. If you're purchasing a new home, typically new homes take anywhere from 4 months to maybe 8 months or 10 months for the build to be completed, depending on permitting, stuff like that. So it's going to give you time to plan when you can start your purchase to build. It's also going to give you time to plan on the date that you want to be fully moved in the home. The last thing, which I kind of put over here in green just to kind of chop it up a bit, is you might have to rent first. Depending on this up here, the time to fix the issues, you may have to rent first. They may say to you, well, you need to be at your job for a year or two in your new state first. Again, don't ever assume. Get this done for the 30 minutes to an hour that it's going to take you to upload your documents to the secure website for whatever lender you like, or to head over to the bank with your documents. You have to get this done. Okay, so the correct loan for your needs. Now, maybe you're interested in purchasing a residential home. Okay, if you're interested in purchasing a residential home, that loan is going to be a different loan than if you are purchasing an investment property or a vacation or a second home property. Typically the interest rates are going to vary, and the investment home would probably be the highest of the three for the interest rate. Now, there's potentially other types of loans out there, but this is just the basics. The next thing is the lenders. Okay, so you can go through a broker, which is great. Just make sure that the broker or the bank or whoever is licensed in the state of Florida and has loans for the state of Florida. So don't just go to like any website and start putting in your information without knowing if they even lend to Florida, because they might not. Okay, so a bank is another one of the lenders, and also the home builder. Now the home builder, some of the home builders have their own mortgage company. Some of them source out to like a third-party mortgage company, which would be like some kind of a broker. So what they do is they come up with a deal with them, and then they become like the official lender for the builder. Now, when you use the lender for a home builder, typically after you close on your home, in about a month or so, you're going to get a letter saying that your mortgage loan was sold, and you're going to get something that's going to say like, your loan is now with Chase Bank, Wells Fargo, any of the big banks, your loan is going to go over there. So that's pretty much how it goes with the builder's lender. A great thing to do is to contact me first when you're at this point, so I could kind of guide you as to which is the best one to go with depending on your needs. Because you might not really want to go to the bank first depending on where you're at, or maybe a broker's not right. So, contact me. It won't take too long to figure that out. Okay, another thing. Let me grab some water over here. Selling your current home. Now, as soon as you start the process for this and they go through everything, you might have to sell your current home in order to get this mortgage pre-approval. Okay, so that's going to depend on a lot of things, and again, all that stuff is based on the regulation that the mortgages have. Now, you might have to sell your home. Okay, another thing that's extremely important, and this is extremely important because this happens to a lot of people, the loan amount. And this is something that if the mortgage hasn't come forward and said to you, okay, this is what you have to do, make sure you ask this question. Okay, how much is your mortgage going to be with you keeping your current home? Now, sometimes people like to keep their current home because they want to wait until the new home is built, and then they just move everything from the current home into the new home, then they sell the current home. Example, which is some fictional numbers here, the pre-approval might say, well, you're pre-approved for $250,000 with keeping your current home. But then if you sell your home, you might be pre-approved for a $500,000 home, okay? Because owning a home has expenses that they are factoring in. Okay, so we got through that part, thankfully. The next thing, now this is a huge one as well, is that you're going to show sellers, home builders that see hundreds of people every week going in and out of their offices, and realtors that you're a serious buyer. Now, what does this mean? This shows that you've been approved, you can actually buy. Now, you could have serious intent, you could want to buy, you could maybe, you're not in a rush or anything like that, but you know what? When the salespeople at the offices for home builders see hundreds of people, and you walk into the office and somebody else walks into the office, and you're both kind of there at the same time, and you walk in and you have a pre-approval, but the other people don't have a pre-approval. Well, where do you think that sales associate is going to put the time and effort into? The person that maybe they're just window shopping, maybe they're just looking for a friend in another state or another country, or they just like the pretty furniture in the models, or somebody that actually has the money and can actually pay. Now, a common thing in this business is people say they have cash. Well, you have to show proof, bank statements, stuff like that. I'm going to get to that in a few minutes. Okay, so serious buyers for everyone. If you're purchasing a resale home, the home seller, many of them are going to want to see that you're a serious buyer. They're not going to, many of them are not going to accept an offer without this pre-approval. Now, some of them might not even want you in the home looking at it without being pre-approved, because they just don't want, hundreds of people just, parading through the home every day, just, again, window shopping, looking around. Maybe they're just, the common term I hear is nosy. I just want to be nosy and look. So, that's it. Now, it's great for cash buyers as well. So why is it great for a cash buyer? Now, many times a cash buyer does not want to show bank statements because they just feel like it's a personal thing, whatever it is. So, spending 30 minutes to an hour to have a pre-approval done, you're going to get the letter, which I stated earlier, that's going to state the funds have been verified and you're pre-approved for a home of whatever the amount of money. Now, why else is it good? Well, the first thing, like I was saying, is that it's verifying the cash. So it's verifying that you have the money to pay. But you're also going to have the backing of the lender, of the bank. So you got the bank at your back. So any potential home seller is going to see you as being like a super buyer, because you have both now. I mean, either way, if something happens with the cash a little bit or whatever, you got the bank backing you up. If you choose, to go the route of, the route of the mortgage, you can. This is really separating you from, a fake buyer that just, wants to get involved in the process but can't pay. Okay, so I just explained that over here. Now, as this was A and now this is B over here, the cash for the deposit or the down payment, or whatever you want to call it. So most home builders are around 10% they require. Some of them are going to require more. There might be a builder that requires 20%. Could be more if it's like a special build. Could be, who knows, 40%. It really depends on the situation. But for a safe number to have a huge selection of home builders to choose from, 10% is typically common on the upper end. Now, let's just say you don't have quite 10%. There's still going to be home builders out there. Sometimes builders that ask for 10%, I can negotiate and try to get this down to maybe 5%. Now, the reason why I said 5% is because this is the next number. A lot of home builders ask for 5%, but if you, let me try to get into the viewer here a little bit better. If this is your, 20% of home builders, right? Well, excuse me, let me reword that. Let me back up and reword that. Okay, so if these are your home builders here, right, and this is your total, like the ones that maybe want 40% down, they're very, very few, very, very hard to find, but now you got the ones that ask for 10%, so that pool's going to be just a little bit smaller, right? Now the 5% ones are going to shrink that more. And then there's going to be ones that are going to be like maybe 15,000 or under, and those are going to be somewhere in this small little section here. Okay, so the point that I'm trying to make is that if you don't have a lot of money to put down, you have options, but your options are going to be limited in the process. Now, how does this tie into the pre-approval? Because the pre-approval, if you don't have enough money for a down payment, it's kind of going to be noted, and they're going to come back to you and say, well, we feel like you don't have enough money for it. So, the pre-approval is super important because it really kind of ties everything together. But for you on your end, just keep in mind that if you are going to purchase a home, you're going to have to put some money down on it, right? And home builders all ask for money down because, let's face it, they're not going to build your home with nothing to show for it. They want to know that if the home buyer decides in 2 months after they've already started building, or 4 months when they're really into it, that the buyer says, you know what, I don't want this home. Well, they're going to keep that deposit because, well, let's face it, they just put time, they just put money into it. And that's just how it goes. This is a business, and, home builders, home sellers, everybody here is, out to make some money off of it. So I hope that you found this video helpful. If you do have any questions, please don't hesitate to reach out and contact me. Check out my website at wintergardenanew.com, where you can find the latest homes for sale at the bottom of each page, if the home is listed on the MLS. And I do hope to hear from you. I am no pressure sales, and I do believe the home should sell itself, and no one should try to sell you on the home or the community. It should always just feel right to you and, come natural. And as always, please don't forget to share this video and subscribe. Thank you again.